question regarding emerging market, and I'll address it to Peter Boodel, sir, and Manraj. Since you both understand emerging market very well, there has been a Cold War going on in terms of cornering China due to disappointment related to COVID, its trade standoff with America, and the China and Hong Kong issue. However, the world is still highly dependent on China for microchips, semiconductors, chemicals, pharma API, textile, steels, raw material, and many things more. Will it ever be possible to break the supply chain dependence on the China? What will be the supply chain look like in the post-COVID world? Who will benefit from realignment of global supply chain? And do you think India could benefit from global trade and reallocation of investment due to this scenario? So, a lot of talk is going on within the India, like a lot of business will come to India, a lot of industry can ship to India. And this is the common question within all the investor community in India. So, sir, Peter, sir, can you throw some light on this? Is India really going to get some benefit out of this?
Listen, I think this is a Cold War. And China, as we look at it, is making a dramatic shift to their own technology chip stack. And I think that they hope will separate them from the rest of the world and allow them to innovate and communicate safely on their different technology platform. We'll see how successful that is. Japan invested heavily in memory in the 80s, Korea in memory in the 90s and 2000s, and I think it is about to be displaced by China, who are investing heavily in this tool set in the 21st. So we have, against this backdrop, I spoke before about the Cold War, we have sort of essentially a new Apple versus IBM Microsoft war on the horizon, except now it is between states, and we'll see how it plays out commercially. Regarding your question of offshoring out of China, every business I speak to is taking business and supply chain out of China. I have not spoken to a single business of late who isn't. Many of them are doing business with the same counterparties in China who are simply opening up new factories run by their people in Vietnam and Indonesia and other places for assembly or other less value-added additions. But I think there's an enormous opportunity for India, as I mentioned before. However, I would just comment that, even back in the 90s when I lived in Hong Kong, the easiest place to do business in Asia was probably Singapore. The Hong Kong won for efficiency, but Singapore was the clearest, simplest place to do business. They always say, in China, only one guy talks, and he's the guy that's in charge. And in India, everybody talks. You don't know who's in charge. And I'd say India is the most complicated place to do business I've ever seen. I think that's improving under Modi. I think there's lots of low-hanging fruit. So I think the simpler India makes it to move to India, and with willingness to bring foreigners in, which has traditionally not been their strong point, I think that shift under Modi is possible and in process. But there's a long way to go, but that is opportunity.
Thank you, sir. Since you have a lot of understanding on the global market, especially US market, given that the US market gives direction to the other world market, including India, what are your view on the US market going forward? Moreover, the Nasdaq seems to have discounted the COVID crisis rather quickly and is close to its all-time high today. Is this reflecting any major trend emerging out of the technology space, especially with regards to the FANG stock? Lastly, we have recently seen large FDI inflow into India that would Reliance Jio by Facebook and many more PEs. How do you read all these developments? Can we have your view on this going forward? Can Indian corporates, big companies, the larger capacity guy can have a lot of FDI from these people? Peter, sir.
Yeah, no, thank you. Listen, just a couple of very interesting set of questions there. I spoke a bit about my thoughts on the U.S. market. Just to maybe to recap on a couple other points already made. You asked about how India could improve. My biggest point would be turn permissions into reporting. There are so many permissions one needs to receive in India. Why not change every single one of those permissions into a report and make that guy who gives permissions be a reporting receiver? And when I just report on the business I'm going to set up, then things can be done in aggregate. And so that would be the most efficient way to make it more an enviable place to come. And gold, I'm in gold and Bitcoin. I'm a Bitcoin guy. I'm happy to talk more about that, but I think that is the technology of the future. It is the gold of the future. Gold is worth 10 trillion. Bitcoin's worth 175 billion. They're both stable. They do not rust. Gold makes better jewelry and makes better wedding presents, but they may, in the future, I think Bitcoin will be worth more than 150, 175 billion. U.S. market, I would just echo what Manny said. You have these very large companies that are technology focused. The market is not the economy. The U.S. market is very different than the overall economy as a whole. And I think that those businesses, just look at Zoom. We're having this meeting because of tech. And so tech will continue to perform. The cloud is eating software. I think that is, software was eating the world. That was Andreessen, but now cloud is eating software. So we are now more and more reliant on the cloud. I think those businesses going forward will succeed. Azure at Microsoft and AWS at Amazon, which represents half of Amazon's value today. Those businesses are here to stay and are here to grow. China's Alibaba, etc. So I think I feel that the U.S. market is not overvalued. I think it is fairly valued, and I think the technology and healthcare space there and the innovation are going to power the market going forward. And so I think there are good things to come from the U.S. Into the future. You had one last question, and I forget what it is, but so Reliance Jio. It's a remarkable thing when you can offer people 30 times the bandwidth at sort of a little bit more than what they were paying before, if not in line. So you make something 30 times better. I think that's pretty attractive. 1 megawatt a month for a megabyte a month versus a megabyte a day. So I spoke to a very large company in the US a year and a half ago, that said that they were doing more packet delivery into Reliance Jio early in Reliance Jio's formation than they were into Comcast in the US. So I think that platform as a packet circulation tool is incredibly powerful. And I think Facebook has acknowledged that. And I think that will continue to grow. And I think it's unique as a platform because of the 30 billion he spent and keeping it dark until he lit it up. So I think that has a wonderful future, and I think it'll be good for India.
So in continuation to this question, what risk do you see in deglobalization and protectionism, as recently our Prime Minister of India has requested the nation to be Atmanirbhar? It means self-reliant. If all these things happens, what are the repercussions for this on the global market, or global trade rather?
Well, yeah, it's a great question. You have to go back to history, I think, as well. After World War I, after we had, pre-World War I, we had a very borderless society. You didn't need a passport to travel through the countries of Europe. And after World War I, which also coincided with the largest pandemic in modern history, recorded history, not recorded, but sort of modernity since the radio, let's say, or not radio, but telephone. That pandemic closed borders, and that war closed borders. I hope we do not have a war now, but trade wars turn very belligerent quickly. So I trust that does not happen. I think the opportunity is for India to take share of what had been a manipulated currency to keep it cheap and low wages in China, and a very efficient place to do business. If India can get more efficient and more welcoming to foreigners, I guarantee you business will flow there. It's just a question of how much easier they can make it, because it was pretty hard before.
Yeah, there was one question on, I think Peter can answer this. Is there any chance, just like in 2008, of any major financial institution falling because of COVID problem? Is there any chance for any major financial institution failing now, just like Lehman in 2008?
I think in the U.S. system, absolutely not. We have very underlevered businesses. Their core equity capital ratios are far more secure and underlevered versus 12 years ago. And then you look at, the largest part of their loan books in general is mortgages. And, people haven't taken out a home equity loan in 13 years. So, and house prices have gone up quite a bit. So the loan to value ratio of the book of, Wells Fargo and the other largest lenders in America is very secure, if not underlevered. So I think the risk there is low. Now, mortgage servicing, because of forbearance and others, there are some mortgage servicers that risk. But as I have commented, I think we get back to business reasonably soon, and many of those businesses will restart, and we'll see if we get any of the servicers can struggle through that. They will require some capital probably, but I don't think any of the major systemic banks have any issue whatsoever. But maybe Manny could speak to that as well, or Robert.
Yeah, thank you very much, Peter.